Scalp trading is a very short-term strategy that involves taking lots of small profits each day. Scalpers will open and close multiple positions each session, with some trading every few minutes or even seconds as they hunt for opportunities. When scalping, you're aiming to earn small profits from most of your trades, targeting a higher win rate than day or position trading. Once a market has moved a little bit in your favor, you exit it to realize the profit. If a market moves even slightly against you, you normally close the trade immediately and take a small loss. Scalping is one of the most intense forms of day trading. It requires even more time and a disciplined approach to avoid letting profits or losses run. After all, when margins are this thin, a single large loss could wipe out the gains from multiple successful positions. While a position trade may last several months or even years, and a swing trade several days up to a few weeks, a scalp trade's duration is mere minutes, or even seconds. This means that scalp traders must always be fully switched onto the chart and be in a position to react to price movements in a timely manner. If a scalp trader is not focused in this way, they may miss potentially profitable setups. The below chart gives a hypothetical picture of the frequency of scalping trades, where a stochastic is used to help find entry points on a 1-minute chart. Notice how 5 trades have been made in the space of fewer than 3 hours, although many scalpers will often trade much more than this in the same period. Forex scalping can potentially be profitable, like any time frame of trading. Typically, a scalper would look to make in the region of 5 to 10 pips per trade. But how does this translate to cash? Let's assume that your average pip value is about $10. You can make $50 for every 5 pips of profit, and if you make, say, 10 trades a day, this would amount to $500. However, you must naturally also factor in losing trades, of which there might be many as a scalper, to determine profitability. In order to give yourself the best chance for profit, you might aim for a high volume of trades per day, with a strict exit strategy and rigorous risk management practices in place. An entry and exit strategy can be assisted by technical indicators giving signals as to overbought or oversold conditions. How to scalp Forex without getting burned? To scalp Forex without getting burned, you'll need to primarily ensure you have a solid